You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message. And I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by. I am it. Well, I do have a great team when it comes to developing a financing plan, a plan to save you money. I personally work with you, even if you don't have any needs today. Save this number in your phone for future reference. 800-306-1990, 800-306-1990. Let's check and see, what are we celebrating today? I know there's, well, can I go back? I don't know. Josh, can I go back to yesterday? Peanut butter fudge day. I mean, there's no way we could go past peanut butter fudge day, right? I mean, having beaten anorexia, it's the time of year. I like any kind of fudge, but peanut butter fudge, that sounds pretty amazing. Gingerbread cookie day. Yeah, we like gingerbread cookies. We can go with that one all the time. Do you make them yourself or do you go to the store and get them? I think my wife just bought some packages to make a gingerbread house. I don't know about gingerbread cookies. Stuffing day. I like stuffing as well. So and I don't know, red mitten day. Not so much on the red mittens. I think we're going to pass that one, Josh. We're going to walk away from the red mittens. Hey, we want to appreciate you to checking in with us. If you want to be part of the broadcast, hey, just go ahead and go. Here's what you need to do is go to StreamYard.com/Facebook. StreamYard.com/Facebook. Put your name in there, or give them the authorization to tell us who you are so we can say hello. If you're listening to us on radio Sunday morning, 7 to 8 a.m., great time to be listening to Ron Siegel Radio. But we record this on Wednesday mornings. So if you want to get an invite for that, just let us know, or hit I think if you go to YouTube, I think there's a subscribe button on YouTube and a bell will give you a notification every time we do a live broadcast. We broadcast, 5 shows a week, I think, or 6 shows a week. We're creating all kinds of educational information for you, right? And it's all it is. It's for education. Whether you use the Geneva team or you have your own favorite lender, we have our preferences. But I will share with you the information that we give you can be used anywhere. You don't need to just use the Geneva team for that information, but they do have all the products and the programs, so why wouldn't you? And, as a radio host, I get all kinds of things to give to you for free. So one of our favorites is finding out about your home. Right, the one email per month that you get that will talk about your 90% of you. It's going to talk about your largest asset. If you're a homeowner, 90% of you, your largest asset is going to be your home. Yet nobody tells you anything about your home. So if you go to rsrhomedigest.com, rsrhomedigest.com, we're going to send you once a month a free report. And all you do is you're going to put into the system, what is your address? Not your neighbor's address, put your address in there, because who cares what your neighbor's house is worth? You want to know what's going on with your property. It's your asset. It'll tell you about your liabilities. It'll give you options for maybe if you like short-term rentals. It might give you that information. Can you afford to buy another property? All that is part of the process, and it's all free. rsrhomedigest.com. Now, for those of you that want to get out of debt, want a lot of security on your retirement, rsrnodebt.com, rsrnodebt.com. And these things you can go and you can text as well. So our text short code is 79564. So you can go to rsrnodebt.com, and that's going to give you some ideas on how to get rid of all of your household debts. We like the idea of not having. Now, I'm not a big fan of. There are some of the radio hosts that say you want no debt, including your mortgage. So I'm not a big fan of that one, just because we're in Southern California. There are some real ways to make money. And I'm going to say rsrrapidpayoff.com, rsr rapid. I know I'm giving you a lot here. And if you're listening to us on radio, you can go to ronsiegelradio.com and get a copy of our of any of our previous replays. But go to RSR Rapid Payoff. And it's going to show you a way that with mortgage planning, you can take money out of your property and be debt-free in about half the time you would under normal circumstances. Now, we don't get to guarantee very much on Ron Siegel Radio, but the insurance companies, when they put you in through their actuarial tables, they're going to give you guarantees that are beyond belief. They're going to give you some guarantees that are going to tell you, hey, if you do what we tell you, now this is a big if you do what they tell you, you're going to be able to increase your net worth exponentially over a very short period of time. Why? Because you've got a lot of what we call dead equity. The money that's in your real estate right now, it's not doing anything for you. So it grows because the property is appreciating. Now, if the property stays the same, or if you have a mortgage or no mortgage, regardless of any of those things, it doesn't matter, right? Because whatever you do, the property will still appreciate. If the market's going up, it's going to go up a lot. If the market's going up a lot. If the market's going up a little, it's going to go up a little. And if it was like 2010 and the market did not go up, it went down, well, your investment goes down. But here's the issue. If you've already got the cash out, if you've liberated your equity and put it into other investments that are working for you, they're going to continue to grow regardless of what that property value is doing. Now, we know property values almost always come back. I mean, I don't know that it probably could happen where it doesn't. But so far, property values over any 10-year period are basically above where they were at the 10 years prior. But most people are not putting together a plan for their equity. They're not putting a plan for their net worth. I want to retire. Okay, how are you going to do it? I got a 401k. Great. How much you putting into it? Nothing. So what are you going to retire with? Nothing. Right now, for the most part, most people, now, again, you're going to hear a lot of people aren't going to want you to hear this. But for the most part, you don't need to have a 401k or an IRA because there are other options that are better for you. Yes, you're getting the money in a tax-deferred basis, but what does that mean? That means you get to pay more taxes. You're just not paying them right now. See, the whole concept of the 401k or the IRA. Now, the 401k, if you're getting a match from your employer, that's good. But the whole concept of a 401k or an IRA is you put a small amount of money in now on a pre-tax basis. You want that to grow into a large amount of money, take it out, and pay taxes. Does that make sense that your goal is to pay more taxes? Put some numbers to it. If you have $1,000 that you put into your 401k, and I don't care whatever time period it is, but you put $1,000 in, and you're in the 30% tax bracket, you would have had to pay $300 in taxes on that. Okay. That $1,000, though, grows to $10,000. Now you get to pay $3,000 in taxes. Which would you rather pay, $300 or $3,000? Easy number. I know I just throw that out there for you. But it's a pretty simple concept that if there's ways, I consulted with somebody yesterday. They're a business owner. And, the last couple of years have not been great for this particular business. He's broken even, right? He hasn't been able to take much of his salary. And I said, did your tax planner look at your retirement fund? He's got a lot of money in a retirement account. Would it have been beneficial for you to take that money out of your 401k or his IRA? He had an IRA. Would it have been smart from your tax planner to take that money out? Your tax liability is still going to be probably zero, and put it into, so you're going to have to pay a 10% penalty, right? So, and again, I'm not a tax guy. So you got to talk to your tax people about this. But take that money out, pay the penalty, which is 10%, far less than any taxes you'd have, and put it into a Roth IRA or better instruments that we can talk to you about, where the money is going to grow, but you're not going to be taxed on it later. These are strategies. A lot of people don't follow strategies. So I'm just throwing that out there that you need to understand what the strategies are that can help you, that they can help your family. So free tools, write this down, text or email, rsrnodebt.com. That's a tool there so you can just see if you qualify. RSR Rapid Payoff. That's going to give you a little presentation on what it means to pull money out of your property. So you got two different tools right there. We told you about getting rsrhomedigest.com. rsrhomedigest.com. That's going to give you the information about your property. Just a few tools from your friends at Ron Siegel Radio. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, why do you need a pre-approval letter when you're buying a house? 4 things every renter needs to consider. And we've got a better outcome segment for you today. Property details are a game changer for divorcing homeowners. All that and more. You can reach me anytime off air, number 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio, your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends at Geneva Financial. When you're ready for that next home loan, Geneva's got the programs and the products. You just need to make a call, 800-306-1990, 800-306-1990. So every Thursday, and being that we record on Wednesday, I'm giving you week-old data. Freddie Mac comes out with their mortgage market survey. Last week they came out, the number was 2.98%. So that came out on the 10th of November, 2.98%. What does that mean to you? Let's get a little education on mortgages here. I saw one of the companies recently, I heard an ad on radio and I saw their billboard. And they were advertising a 2.5% 30-year fixed rate loan. But then they show the APR is 2.75. What does that mean? Well, what they're telling you there is there's a lot of cost going into that loan. Whenever you see an APR that's significantly different than the interest rate, that's telling you there's a lot of costs involved. What would the costs be? Well, the costs in this case are probably points to buy down the interest rate. What is their goal? Well, their goal is to get you to call. If they want to get you to call, how do they do that? Well, they give you an interest rate that's very, very attractive. That 2.5 looks really good. But then you might have, and I don't know what their number is because that's not my company. When the APR is that far different, it's probably going to be 2 or 3 points. What is a point? So a point is 1% of whatever the loan amount is. So if you're looking at a $500,000 loan and they're charging 2 points, that means it's $10,000 to buy down that interest rate. Is that a good idea or a bad idea? Well, I'm going to tell you, I don't know. It depends. What are your goals? What are your objectives? How long are you going to be in the property? If you're going to be in the property a short period of time, not a good idea. If you think interest rates are going to go down and you can get a better rate down the road, not a good idea, right? Because what is a refinance cost? Roughly $2,500 to $3,000. I know there's companies out there that say it's no cost. Hogwash. You know better than that. Because the escrow company is not working for free. The title company is not working for free. Do you think the government's going to waive their fees for you? No. The underwriters, the processors, none of these people are working for free. So when they say there's no cost, what that's telling you is the cost is built in somewhere else. Right? Just a little education for you how the game is played. So you can look at it and you can say, hey, Ron, what I'd like you to do is send a total cost analysis. And if you were listening in the last segment, and you should have been, I mentioned to you a program called one of our presentations. It's rsrrapidpayoff.com. rsrrapidpayoff.com. If you go and you pull that presentation up and you look at it, it's going to give you what we call a total cost analysis. And that's looking at several scenarios to say, what makes sense for you? What is your time horizon? You'll probably see, and I don't remember the exact times, but it's probably got how much money you're going to save on a monthly basis. Should you buy down the loan, yes or no? When is the 5-year analysis? And what is the 15-year analysis? Sometimes I do a 10-year analysis. It just depends. But the whole issue is you need to understand what's the benefit for you and your family. Where is the time horizon? Because if somebody says, this is the right deal for everybody, 2.5 with a 2.75 APR, they say it's the right deal for everybody, I'm going to tell you right here, right now, run. Because they're not looking out for you. Because what if you're saying, well, I'm going to only be here for another 2 years? Your break even doesn't work. They should have told you that. If you're going to be in the property 10 years, what if you think, like I do, and it's just my opinion, that, well, it's not my opinion that the yield curve on the bonds are flattening. That's kind of technical. I'm not going to get into that right here, right now. But when you see an inverted yield curve, that is generally going to tell us that a recession is on the horizon. Now, we already saw GDP dropping when the last GDP numbers came out. 2 consecutive quarters of negative GDP is the definition for most people of a recession. So if we think that there's a recession on the horizon, what does the Federal Reserve generally do to get us out of a recession? They lower interest rates and they use whatever tools they have. So right now, the Federal Reserve discount rate, which is the only rate the Federal Reserve controls, that discount rate is basically, they can't lower that anymore. They've used this quantitative easing for the last, 10 years, 11 years to try and bring down interest rates, because what they do is they increase the demand. There is no extra supply. So we see the bond price goes up, interest rates go down. It's one of the tools that the Fed has to lower interest rates. They do that in the case of a recession. So when you've got all this government spending, it always leads to a recession. Almost always. Almost always leads to a recession. There's no such thing as a free lunch. You got your federal money, the government's money, the money from the government. Yeah, that's you and me who pay taxes, sending out free money. You go and you spend it. That causes inflation. Definition of inflation: too much money chasing too few goods. If you've noticed any empty shelves in the stores lately, too few goods. Got money to spend, but can't go and find out where to spend it. Too much money chasing too few goods. That's the definition of inflation. Inflation goes up. The consumers can't spend anything. The money doesn't go as far. Gas prices. I'm not going to tell you about gas prices right now. I do that on a regular basis. I get ill from it. It's I have a lot of Pepto-Bismol on hand so that when I mention gas prices, Josh and I can both get ill, right? We're 300 miles apart, but hey, the one story gets us ill every time. But the bottom line is, if you're looking at interest rates, know what the time horizon is. Get the education. When you go online, they don't tell you the education. They say, here's today's rate, lock it in, yes or no, boom, done, adios. Well, what's the market doing? Is it the right time to lock? If somebody would have locked their loans last Friday, probably not a good idea, because the market's down. The bond market has the yields down today on mortgages. Mortgage-backed securities are up today, Wednesday, as we're recording. I know if you're listening to us on Sunday, the bond market does not trade on Sundays. But just give you a little information. And now you want some information on these things? Again, free gift from Ron Siegel Radio. All you have to do is go to ronismylender.com, ronismylender.com. You can get a copy of, you can download our mobile app. What is on the top of the mobile app? Yes, there's a mortgage calculator right there. So you can play around with that and see. Again, it's free, costs you absolutely nothing. Gift from Ron Siegel Radio. So you can take a look at it, see what the market's doing, see if it makes sense for you, see what's worth it for your family. Now, another misconception that I'll tell you about. I need to save 1% or it's not worth it to refinance. Hogwash. Hogwash. Right? Because what if you're going to save $700 or $800 a month? Go to your favorite restaurant. I don't know, what's your favorite restaurant? Don't tell me McDonald's. Right? I mean, you can go to, I like Sabatino's down at the beach, Mastro's, Ruth Chris. Tell them you've got $700 to spend for dinner. Nice dinner. Or you've got 1% on your mortgage. What do you think they're going to tell you? They couldn't give a hoot about your mortgage, right? But if you tell them you've got $700 for dinner, Mr. Smith, I'll seat you right here, right? Tell them you're going to give them a big tip, they'll give you a better chair, right? They'll kowtow to you. So don't worry about the percentage. Worry about the dollars in your pocket, right? I hear that all the time. I got to save 1%. Now, what if I told you you can save less than 1%? You save $800 and cut down the payment time on your mortgage by 10 years. Well, if you had just looked what I told you, rsrrapidpayoff.com, you would have seen exactly that scenario laid out for you. rsrrapidpayoff.com. I don't know what more to tell you. I mean, it's just some great information on a simple concept that there is no free lunch. Don't worry about the percentage that you're saving. Look at the dollars. Look at the APR spread between the amount of the interest rate and the APR. If it's a big number, a big spread there, that means there's fees that are being charged to you. And sometimes those fees are good. Sometimes they are not. You're listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, a workshop, why you need a pre-approval. We're going to also talk about 4 things every renter needs to consider Property details are a game changer for divorcing homeowners. All that and more. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or RonSiegelRadio.com, Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990, a workshop for you. I'd like to give you these workshops just because, well, for a lot of reasons. Number one, I think it's great information. I think it's beneficial to people. We want to get you the information you need to make educated decisions in your life, especially when it comes to the concept of buying a new home. So let's talk today why you need a pre-approval. Why you need a pre-approval letter to look at homes. If it's a great real estate professional, they're not going to take you out looking at homes unless you have a pre-approval letter. So that's the concept today. And we like helping you understand why you need to have a pre-approval letter before you start looking at a home. Just a little bit about me, because I do share this, and we repurpose these workshops, even though we'd love to bring them to you right here on Go Country. But I've been doing this for a long, long time. Bought my first houses in the mid-'80s, early '80s. Certified mortgage advisor, certified divorce lending professional. Been doing radio since 2010, about 2,300 shows, almost 2,400 shows. So I've talked to, you name it, bankruptcy attorneys, divorce attorneys, financial planners. Get to interview all of them over the last 11 years of doing radio. And it's great because it gets me a lot of education that I can share with you. So let's get an overview of what we're going to talk about today. We're going to cover why you need a pre-approval letter before you start looking at homes. We're going to discuss the reason the real estate agents and sellers prefer to work with customers who are already pre-approved. We'll go over everything you need to know, including what the benefits are and how it can help you find a home faster. So let's get started. You may be wondering what it is like to buy a home. If you haven't bought one in a while, it's not the same as what it was 10 years ago or 15 years ago. We're in a different world, different market. Should you start your search online? Should you go out and look at homes? Should you get pre-approved for a loan first? What's the first step? What's a pre-approval letter? Pre-approval letter is a written letter from a mortgage lender that states that you have been tentatively approved for a mortgage. Your pre-approval letter includes the specific amount you're approved for, as well as your interest rate and loan term. And it is what sellers are looking for to make sure that if they accept your offer, you'll actually be able to get financing for the house you are buying. If you're looking for a home, it's important to know how much you can afford, and sellers feel more comfortable knowing that you have already been pre-approved. Here's an issue. If you're going out and shopping before you're pre-approved, maybe you're looking for a $900,000 house and you can only afford, based on your qualifications, an $800,000 house. Right? You're going to be disappointed when you start going and looking at the $800,000 homes. So get pre-approved first. To get pre-approved, you must first meet easy for me to say. To get pre-approved, you must first meet with a mortgage lender. You'll need to complete the following steps to get a pre-approval letter. Step 1, complete a home loan application. You can do it online, in person, over the phone, right? You're going to have to get a credit report. Your lender will need to pull a 3-bureau credit report that will show your credit scores, credit history, and your liabilities. Now, big myth. I hear people all the time, Ron, can you give me a quote, but I don't want you to pull my credit? Well, number one, your credit is one of the lowest items to determine what your credit score is. People are most worried about their pulling credit, and that counts for about 10% of your score. And they don't pay attention to the payment history and utilization. Combined, that's 65% of your score. So just be aware, the pulling of credit, unless you're having everybody under the sun pull your credit, it's not as big an issue as a lot of people are going to make it out to be. Step 2, we're going to document your assets. The next step to sending in your supporting documentation. That's going to help determine what you'll qualify for. This documentation will usually include last year's W-2s and 1099s, last 2 years' tax returns, paycheck stubs for the last 30 days, bank accounts, retirement accounts, and other asset information, proof of down payment funds, recent residential history. To speed up the pre-approval process, it helps to have these documents ready to go before you get started. Now, be aware, some of these items can be obtained by your lender electronically. So there's a service that some lenders will use. It's called Account Check. And that service, go in there. The lender sends you an invitation. You go in, give the service the authorization to generate a report, not access, but generate a report that's going to go to your lender, and that's going to give them the information they need to know what your assets are and where your money is coming from for your down payment. So got to have that. Step 3 is the underwriting process. The last step in pre-approval process is what is called underwriting. As what will happen once you have completed your mortgage application and sent in your paperwork. Your lender should be able to get you your pre-approval letter within 24 to 48 hour period so you can start looking at homes. What is a pre-qualification letter? Most sellers today are asking for pre-approval letters, but some are allowing what's called a pre-qualification letter. Pre-qualification letter is usually easier and faster to get because it does not involve submitting your paperwork or verifying proof of funds or income. So that's a very, very low bar. Many realtors, sellers will not accept a pre-qualification letter. All they want is the pre-approval letter or a pre-underwrite. Spend the extra time to get pre-approved. But don't think that just because you filled out a mortgage application on some online website, you actually have a pre-approval letter, because you don't. And sellers agents know the difference. Spend the extra time to get pre-approval letter from a mortgage lender. It'll not only help you get in to see a home that you are interested in, but could also be what helps your offer get accepted when you're ready to buy that home of your dreams. Now, you can go one step further and get pre-underwritten. Yes, Geneva does do the full pre-underwrite. Takes a little bit longer. It's going to take another day or two. But that's when you're going to send in all your documentation. You do everything you did for the pre-approval, but now it goes to a human underwriter. The pre-approval is going to an automated underwriting system. The full underwrite, it's called a TBD underwrite or a fast pass, or there's various other names. But that's when the underwriter actually goes through and looks everything over, says, I see everything I need and I approve this loan subject to. We need to get a property address. We need an appraisal and clear title. You can basically get that all done in 5 or 6 days. Because of the laws, usually looking about 10 days to get that done. So again, yes, Geneva Financial will do that for you. And you can talk with our team at Ron Siegel Radio. Our educators are always ready to help with that as well. You can also just give us a call, 800-306-1990, 800-306-1990. Talk to one of the educators on the team. Just give you a little bit more heads up right there. Is this a comment or a question? I didn't even see this over here. Edna, appreciate you checking in with us on a regular basis. Thanks, Edna. So let's continue on with our journey. Any other questions? Just give me a call. Again, 800-306-1990. Just a very brief overview of the benefits of having a pre-approval letter. I want to be sure to answer any questions. If you think of anything after the presentation, the workshop, give me a call. Again, 800-306-1990. 800-306-1990. You're listening to Ron Siegel Radio, discussing your real estate, current events, and the financial markets. When we come back, still got a lot to cover. 4 things every renter needs to know. We may be able to get in a Your Credit Matters segment. I don't know. And property details are a game changer for divorcing homeowners, all that and more. You can reach me anytime off air number 800-306-1990, 800-306-1990, or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Ron Siegel Radio. Your home and mortgage connection.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions, as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime. At 800-306-1990, 800-306-1990. A little feedback. I don't know what I'm getting that from, but we'll try and get that corrected here. But let's get into the real-time real estate segment brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text RSR Home Digest to 79564. Find that dream home before someone else does. So 4 things every renter needs to consider. As a renter, you're constantly faced with the same dilemma. Keep renting for another year or purchase a home. Your answer depends on your current situation and future plans, but there are a number of benefits to home ownership every renter needs to consider. Here are a few things you should think about before you settle on renting for another year. Number 1, rents are rising quickly. Rent increasing each year isn't new. Looking back at census data confirms rental prices have gone up consistently for decades. Median asking price since 1988 looks like I used to say that the chart looks kind of like a high-level ski slope. Now it's just Niagara Falls, right? It's gone straight up. If you're a renter, you're faced with payments that continue to climb each year. Realtor.com recently shared the September rental report, and it shows price increases accelerating from August through September. As the graph shows, and if you are listening to us on Sunday morning, the graphs are on RonSiegelRadio.com in the show archives. As the graph shows, rents are still on the rise. It's important to keep this in mind when the time comes for you to sign a new lease, as your monthly rental payment may increase substantially when you sign that new lease. Number 2, renters miss out on equity gains. One of the most significant advantages of buying a home is the wealth you build through equity. This year alone, homeowners gained a substantial amount of equity, which in turn grew their net worth. As a renter, you missed out on this wealth building tool that can be used to fund your retirement, buy a bigger home, downsize, or even achieve similar goals like paying for an education or starting a new business. Homeowners can customize to their heart's content. That's number 3. This is the big decision-making point if you want to be able to paint, renovate, and make home upgrades. In many cases, your property owner determines these selections and prefers you do not alter them as a renter. As a homeowner, you have the freedom to decorate and personalize your home to truly make it your own. Owning a home may provide greater mobility than you think. You may choose to rent because you feel it provides greater flexibility if you need to move for any reason. While it's true that selling a home may take more time than finding a new rental, it's important to note how quickly houses are selling in today's market. According to the National Association of Realtors, NAR, the average home is only on the market for 17 days. That means you may have more flexibility than you think if you need to relocate as a homeowner. Bottom line, deciding if it's the right time for you to buy is a personal decision, and the timing is different for everyone. However, if you'd like to learn more about the benefits of homeownership, let's connect so you can make a confident, informed decision and have a trusted advisor along the way. That is the Real-Time Real Estate segment, again brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text SLT Home Digest to 79564. Find your dream home before someone else does. You go to rsrhomedigest.com, rsrhomedigest.com, and get that information as well. Let's look at a better outcome segment for you today. And as always, we've got something to give you. You know, Josh, we might have to cut our show a little short today. I think maybe we've given away too much stuff. I just don't know. How much more can we give? Well, I'm going to give more. Better Outcomes segment brought to you by mycdlp.com. If you're going through divorce, know somebody going through divorce, want to help somebody going through divorce, we've got the mydymworkbook.com. You can also text my DYM workbook to 79564, my DYM workbook to 79564. This is a great book tool to go in there and fill out about any real property that you have during the divorce process. So, and again, what's it cost? Nothing. It's a gift from Ron Siegel Radio. How real property details can be a game changer for divorcing homeowners. The details of real property involved in a divorce situation can play various factors when mortgage financing is needed. This article addresses some of the more commonly overlooked details. The two most often questions regarding real property during divorce: what's it worth and how much do I get? Now, what's it worth? You should know that answer. We've told you this before. rsrhomedigest.com. rsrhomedigest.com. Go single email every single month. Each party can get on the list. It doesn't cost you anything. Another gift from Ron Siegel Radio, rsrhomedigest.com. It's going to be one email every month, tell you roughly what the property value is and other options for your property. It uses one of the largest real estate databases in the world to get the information. So the questions again: what's it worth? How much do I get? Fair questions for the marital balance sheet. However, when the marital home is being retained by one party, a few more details need to be addressed to ensure optimal mortgage financing for the borrowing spouse. Who's on the title and why does it matter? First, both spouses are not always listed as owners on the title to the real property. However, this does not automatically preclude the spouse not on title from refinancing the existing loan into their name. Once the non-titled spouse is awarded the real property, they become a successor of interest, which allows them to refinance the existing mortgage into their name. However, who's on the title does come into play when an equity buyout is needed. When the borrowing spouse has not been on the title of the real property for the previous 12 months, access to the equity in the home may be limited. Who's on the current mortgage and why does it matter? When the spouse who's retaining the marital home is not on the existing mortgage, new mortgage financing may still be obtained as there is no longer a need to meet the continuity of obligation as required in the past. There are, however, a couple of issues to address. One, when the spouse whose name is on the existing mortgage transfers ownership to the spouse now retaining the home, the current mortgager should be notified so they don't begin the process of accelerating the due on sale clause of the mortgage note. In addition, the retaining spouse should inform the lender that they are exercising their right to assume legal responsibility for the existing mortgage under the Garn-Saint-Germain Act. Note, assuming legal responsibility for paying the current mortgage is not the same as assuming the loan and does not release the original borrower from their obligation of the existing mortgage. Number two, suppose the retaining spouse is refinancing the existing mortgage. In that case, any overpayments to the current lender or escrow account balances will be refunded directly to the spouse obligated on the existing mortgage. Escrow accounts are in place for the direct payment of property taxes when they become due and payable usually in the following year, leaving an unpaid tax liability for the real property. Once the existing mortgage is refinanced and ownership is transferred to the retaining spouse, they are now responsible for paying the property taxes when due. Any current escrow account balance on the real property should be addressed as to how any refunds should be awarded. Number three, access to information on the existing mortgage may be denied. In most situations, when one spouse is retaining the real property and refinancing the existing mortgage into their name only, the mortgage payment history is required. When the borrowing spouse is not on the current mortgage, obtaining the required payment history is complicated. Setting the proper expectations and gaining the cooperation of the non-borrowing spouse can help make the transaction much smoother and less complex in gathering the required documentation. How is the real property value determined and why does it matter? There are multiple ways to determine the value of the real property. The two most common methods for obtaining real property value are obtaining an appraisal from a licensed appraiser or having a real estate professional provide a CMA. But what's the difference between the two? Both methods are an opinion of value, and no two will ever be the same. Primary difference is perspective. A licensed residential appraiser completes an appraisal who bases their opinion on value on recent comparable homes sold sales data. A comparative market analysis, CMA, is completed by a real estate professional, a licensed real estate professional, who bases their opinion of value on what the property may potentially sell for in the current real estate market. Big issue right there, because if it's an increasing market, well, the real estate professional is going to say, I can sell this for more than what the appraised value might be. And we've talked about that with another free option for you, rsrappraisalgap.com, rsrappraisalgap.com. Again, while both opinions of value are valid, it is crucial to understand the perspective of each opinion and how the two methods apply to the current situation of the marital home. For example, when considering the option of one spouse retaining the marital home and refinancing, an appraisal may be the better option. On the other hand, if considering a sale of the marital home, a CMA may be a better option. When the real property is to be refinanced, the mortgage lender must order their own lender-owned appraisal from a licensed appraiser. It may be advantageous to have the lender request the appraisal to determine value during the settlement process, so everyone uses the same valuation, removing the risk of multiple values. The devil's in the details. What might seem simple at first glance may be more complex than thought. Divorce mortgage planning is a holistic approach to the process of evaluating mortgage options in the context of the overall financial objectives as they relate to divorce situations. As a divorce mortgage planner, a certified divorce lending professional can help you identify any potential conflicts between the divorce settlement, financial planning, and home equity solutions, as well as any real property issues involved in your case. The role of the CDLP is to help integrate the mortgage selected into the overall long and short-term financial and investment goals to help minimize taxes, minimize interest expense, and maximize cash flow. In addition, our goal is to help divorcing homeowners make more informed decisions regarding their home equity solutions and more financing opportunities during and after the divorce. We recommend getting a certified divorce lending professional involved in the process as early as possible. We just want to make sure that you've got all the information you can. That's why we offer you two tools: the My DYM Workbook, My DY Divorce Your Mortgage, MyDYMWorkbook.com, MyDYMWorkbook.com, and we put out a blog post or an article every week. And you can register for that, mycdlp.com, mycdlp.com. I thought we were going to have time for a Your Credit Matters segment, but I don't think we're going to get there, Josh. I think it's a little tight for what we have. I don't see any questions, but I'll remind you once again, go and grab some of the downloads that we've talked about during the program today. If you're just getting to your destination, if you're listening to us on the weekend, I'll give you a rundown of some of the tools that we shared with you. Every one of them is free for you. MyDYMWorkbook.com, that's the Divorce Your Mortgage Workbook. MyDYMWorkbook.com, we talked about that one. We talked about seeing if you can get out of debt. The application for that, it's just a quickie. RSRNoDebt.com, RSRNoDebt.com. How to build your wealth. How to get where you want to go. RSRRapidPayoff.com, RSRRapidPayoff.com. And again, you can text that one as well. And finally, the tool that we give you every single month, it gives you an email once a month telling you about the value of your property, RSRHomeDigest.com, RSRHomeDigest.com. As always, we ask, set that first radio preset button to come back here and join Ron Siegel Radio, where we only speak about items affecting your house and your bank account. Thanks to all of our sponsors. A big thanks to Josh, who's engineering us today. And of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
I'm getting paid by the hour and older by the minute. My boss just pushed me over the limit. I'd like to call him something. I think I'll just call it a day.